everybody. I'm Brittany Lewis, a reporter here at Forbes. Joining me now is my colleague, Alan Ohnsman, Forbes senior editor and author of the Current Climate newsletter. Alan, thanks so much for joining me.
Hi, Brittany. Good to be with you.
It is good to be with you because there is some big news regarding Tesla that I would love for you to unpack with me. Tesla unveiled a new compensation package for Elon Musk that could be worth around $1 trillion. And we work at Forbes. I've seen some high numbers regarding compensation, regarding pay. I've never seen something where it could reach $1 trillion. First of all, have you? Is this unprecedented?
It is unprecedented. It's absolutely unprecedented. No question about it.
And so my next question, what's your reaction to the deal here? Because he'll need to reach some pretty lofty goals to get all of this money within the next decade. What do you think?
Well, this is not the first time we've seen something like this involving Tesla and Musk's compensation. 7 years ago now, I guess, in January of 2018, they announced his current pay package, which he's basically run through, that made him the world's wealthiest person by a lot. And at the time, that also seemed unprecedented and was, I think at the time was estimated to be worth at the low end, like, maybe about $100 billion. So this is many times greater now with the new package. And at the time, it had what seemed like stretch goals for him to achieve as CEO. And those mainly related to earnings and vehicle production and sales and market cap. And then we fast forward to September 2025, and the new package just completely dwarfs anything we've ever seen from anyone. No one, there are no trillionaires in the world. Elon's worth on any given day 400 billion or so, and so he's 40% of the way there already. The first thing that comes to my mind is this is clearly. There's something kind of gimmicky about it, I guess, saying $1 trillion. I mean, I think his fingerprints are all over this. There has been some interesting reporting that came out after the filing from the company on Friday of last week that said that Musk had basically told the board, "You need to give me a big package or I'm going to walk." And over a period of negotiation, this was what they settled on. It has a series of goals over the next 7 years that he would have to achieve, or actually through the end of the decade, that he needs to achieve. Many of them relate to market cap. Now, market cap is an interesting gauge because it is certainly one way to value a company, but it's also disconnected from revenue and earnings. And as we know, Tesla is a cult stock. People who believe in Elon and believe in the company buy the stock no matter what. And you have a price to earnings ratio that's wildly out of whack between what the company's actually making in terms of profit and what it's worth. So setting stretch goals of massive market share, multi-trillion-dollar market cap targets, that's an interesting thing to put down there. But what we have seen certainly is that Tesla is very good at market cap, getting people to believe that it has incredible value that relates back to Elon himself, because he has been at the center of this company from the outset. There are some meaningful, actual targets in terms of earnings and vehicle sales and humanoid robots and robotaxis, but those in some ways feel a little squishy. There was a very interesting piece that over the weekend that TechCrunch did, where they looked at the pay package targets that are laid out for these different tranches of stock that Elon would achieve, and basically the determination by this writer was these are watered down versions of things Musk has already said. One of them would be having 20 million Teslas cumulatively on the road by 2030. Well, up until 2024, Elon used to say we're going to build and sell 20 million EVs a year. He abandoned that goal. As of today, there are between like 8.5 million maybe Teslas on the road worldwide. So they need to, deliver another 11.5 or 12 million between now and 2030, which actually, the way things are going, that could be a very tough goal. But that's a very different target than to say we're going to do 20 million a year, cumulative versus their running volume rate. So there are things of that nature. But I think the other big takeaway is what you see with this pay package is something that we've talked about before, and it would represent a complete transition for Tesla as a business, like what it is now versus what Musk hopes you believe it will be in 5 to 6 years, which is no longer judged as an EV company, but really on robotics and AI and things like that, new businesses that he's trying desperately to build up to mixed success thus far.
I want to talk about that mixed success and what you see if these goals are going to be met, because the market cap, they want that raised from around 1 trillion to 8.5 trillion. Just to rattle off a few goals, they need to sell 12 million more electric cars, 1 million Tesla bots, 10 million autonomous driving subscriptions, operate 1 million robo-taxis. Those are just a few of the goals. Based on our conversations, based on your analysis and reporting on Tesla, what's the likelihood of that happening?
Well, I would say realistically, I don't think the odds are necessarily that great. And we'll start with the simplest ones, the 20 million EV sales cumulative by 2030. What we have seen this year and last year is Tesla's EV sales volume is slowing dramatically. They had been building very fast. And through 2023, they were still saying, we're going to grow EV sales at like a 50% annual rate, which is like remarkable. They don't say that anymore. And that's because they're not growing anymore. They've plateaued for the time being in terms of EV sales. And there are many reasons for that. Their model line is limited. The Model Y has been a tremendous success. It's still, I believe, the world's best-selling individual car of any type. But things are slowing. The big growth that we saw from them in 2022, 23, 24 was entirely coming out of China. That is not the case anymore. They're slowing in China. They've slowed a great deal in the United States at this point. So they are unlikely to sell 2 million EVs this year. They have not been able to really get over the hump and break the 2 million unit barrier on an annual basis. And that looked like they were going to blow past that easily a couple of years ago. It doesn't look that way anymore. So that very simple goal of 20 million cumulative sales by the end of the decade, that alone looks like a real big stretch at this point. And part of that goes back to some of the things we've talked about previously. Growing competition. The Chinese in particular at the top of the list are just crushing them in the domestic Chinese market. They're not keeping up in that market. Worldwide, there are a lot more options these days than there were 5 years ago in the EV space. And then here in the US and in Europe as well, Elon Musk is not viewed as he was a few years ago. As he became more political and more strident and outspoken in his views, that's been very polarizing. So we've seen a very sharp drop in Tesla's EV sales in the United States and in big markets like California. We may see in Q3, this current quarter, a little bit of a positive gain entirely because US federal tax credits run out at the end of this month. So there may be some people who say, I don't like Elon, I don't really like Tesla, but this is a great deal, and I'm going to go ahead and get an electric car for cheap. But that's a very limited benefit, and in all likelihood, they're still going to be down, significantly, double digit probably in the U.S. this year by between 10 and 12%. So just hitting their sales volume target looks like a stretch at the moment. Some of these other targets, the robotaxi target, and FSD subscriptions. The FSD subscription is a tricky one because they don't release that number. So we don't know what it is today. And they've already had to make some adjustments with regard to FSD. Within the last week, they've now changed how they describe FSD on their website. And this is a direct result of, I think, the legal problems they've been having related to their claims about, their vehicles being able to drive themselves. As of today, if you buy a Tesla and they want you to take the option of full self-driving, it now says full self-driving parentheses supervised. And it says very clearly that your vehicle can handle many of the driving functions automatically with minimal driver input or driver oversight. But they're now saying for the first time, you're responsible. You're going to have to, be ready to take over in a very clear fashion. They were not doing that before. That's just happened within the last week. So what that's going to mean for FSD subscriptions in the future, people previously thought, I'm buying a self-driving car because it says full self-driving. And Tesla is now saying, well, we're calling it that, but it's not really full self-driving. So what does that mean for the take rate going forward? They've slashed the price. It's about, you can get it now for like $7,000 or $8,000, which is about half of what it was going for at the peak. But now it has this admission that this is not actually a fully autonomous system. So that could make that a challenge as well. And then, humanoid robots, we'll see. As of today, it's a fun video project, and they put out things, but it's not yet a thing. It's not a business yet. And if they can turn it into one, and they can sell 1 million Optimus robots, great. But that one's a little too hard to call, like whether that's going to be doable or not.
It seems like, based on what you're saying, all of these goals are anywhere from lofty, to put it politely, to perhaps unachievable or unattainable. But it seems like Tesla's board thinks that there's only one man for the job, and that person's Elon Musk, because in a letter to the shareholders, this is what some of the board members wrote, quote, simply put, retaining and incentivizing Elon is fundamental to Tesla achieving these goals and becoming the most valuable company in history. They also added, quote, we believe Elon is the only person capable of leading Tesla at this critical inflection point. Has his leadership in the past couple of years, or really in the past couple of months, reflected that type of praise? What do you think of that?
That was very, very interesting. I guess they have just decided, come hell or high water, our future and the future of the company is tied to this one individual. Objectively, someone could say, you know what, maybe this is time for a change, for a fresh break. If you believe that Elon can achieve technical marvels and really pivot the company into this whole new business model, I guess he's worth, what you think he's worth if the company can actually grow the way that he believes they can. But we have seen the reality that the core businesses are suffering right now, that EV sales are down, battery sales have flattened out, charging sales have kind of flattened out for the time being. So, the 95% of Tesla's revenue comes from those things today. It doesn't come from robotaxis, it doesn't come from robots, it doesn't come from AI. So that's where things stand. The coverage of this or the responses to this by equity analysts has been fascinating because it's all over the place. You have very, very bullish Tesla analysts, Dan Ives, Adam Jonas from Morgan Stanley, who think this is great, this is appropriate, good move. You have others, Ben Callow at Baird, for example, comes to mind, who are a little more cautious, who say these are clearly stretch goals. He's not offering an opinion as to whether they're attainable. And then he points out, we have some near-term concerns about where the business is now. So these are all things for the future, great. But Ben and others, you're seeing more analysts that are beginning to say, we'd like to see a little more focus on improving things as they exist now, as you also pursue these loftier goals. And he, retained a neutral rating on the stock and a target price that's probably about $30 below where it closed today. And then the market reaction to it has been very mixed. It's not like the stock just went crazy when they announced this. So I think it drew. I think there's still like a sense trying to take in what this actually means. Is it just promotional? Is it kind of a marketing thing? Maybe. We also saw, I think it was Bloomberg that reported that behind the scenes, Musk actually told the board, basically, I need a massive package or I'm going to walk. So I need this. And it does seem that his fingerprints are all over it, frankly.
Alan, I don't know about you, but if one of our bosses here at Forbes told me if you hit X, Y, and Z goals in the next 10 years, you'll get $1 trillion. I mean, I would bend over backwards. I would do whatever it took to get that paycheck. And you and I have had conversations for months now on Elon Musk being a lackluster CEO, an absentee CEO, a divisive CEO, very controversial in the business landscape. Do you think this $1 trillion carrot, if you will get him focused on Tesla? Do you think money talks to the world's richest man to the tune of $1 trillion? What does that look like?
It just all seems so hypothetical, because if you already have net worth in excess of $400 billion, I can't imagine having that amount of money. I'm not sure, other than just bragging rights, what difference $1 trillion makes. I mean, how is your quality of life? I mean, you can buy anything you want now. If you're a trillionaire, okay, you can buy several small countries. It's just an unfathomable number to think about that. And, there's been some hostile reaction to this too. I did receive comments from some state officials, from, Treasury officials from the state of Illinois, from New Mexico, from the American Federation of Teachers, which holds Tesla stock. And they're outraged over this. They're saying this is just obscene. No one is worth $1 trillion. No one. It's ridiculous. And it is also a safe bet that there will be, well, I'll make two predictions. The first is, undoubtedly, this will be approved by Tesla shareholders in November. Tesla shareholders, much like its board, are very acquiescent to whatever Elon wants, he gets. So will it pass at the annual meeting in November? Yes. What will happen next, though, is there will be shareholder lawsuits, because while a majority of Tesla shareholders will vote to approve it, a great many will be very upset. Some of the folks that I mentioned, whether it's the state of Illinois, the state of New Mexico, the teachers unions, other big public funds, will have something to say about this. And so we've had years of litigation related to his 2018 pay package. The other thing I'm certain of is there will be major shareholder litigation at this excessive compensation package. Those are my only two predictions. I usually don't like to offer any, but number one is this will be approved by shareholders, and number two, other shareholders will sue, to reverse it.
To your point, Alan, I mean, that is just an obscene amount of money. But I want to get back to his threat to quit if he didn't get exactly what he wanted in this pay package. A, I mean, how serious was that threat? And B, you and I have talked for months, again, about the brand problem Tesla is facing with Elon Musk. Would it be that detrimental to the brand if he did, in fact, walk?
I think there's a strong argument for this might have been a really interesting opportunity for the company to pivot in a different way. So he wants to pivot them into something altogether different with robots and AI. I would say maybe there's a chance for them to really sort of restore and rebuild the brand in ways that they need to. To your point, he's turned off a lot of consumers because he is the brand, and you cannot separate the two anymore. So you have fewer and fewer people who say, I love Tesla, I love Elon. It's like one or the other in most cases, and many people don't even want to be associated with the brand because of him now. I think there's a very strong argument saying an independent board at this juncture could say, Elon, you have done a remarkable job building this company up, building up the global EV industry. And we all owe you a big, debt of thanks and gratitude. You're not worth $1 trillion. No human being is worth $1 trillion. We need to go another way. I think there's a case for saying, bring in someone new at the top, let him go ahead and walk. He can pursue Boring Company and SpaceX and X and everything else, he's at XAI and everything else he's involved in, but really, giving the company almost like a fresh start. Would there be negatives to that? 100%. In the near term, the stock would drop a lot because much of that value is tied to him, because he has, it's almost religious at this point. The stock has value because of his association with it. But over time, depending on the management team that you brought in, you could see, I think, some remarkable gains. And I think Tesla has all of the tools to fix itself. It has an advantage in manufacturing and in battery tech and things like that. Where it has slowed down is it's focused on some of the wrong things. Cybertruck was clearly a very unwise business decision. That was 100% Elon Musk. That was his baby. It's a flop. It's arguably one of the biggest auto industry flops of modern times. But to bring in a team to really work on fresh new product, to find ways to really build the brand out, they have enough capacity and capability to do that. Talent retention has been a problem at Tesla. There's been a steady outflow of really strong, promising people. And I know several former high-level Tesla people. They're now working at Ford. They're working at General Motors. They've gone to different companies. A lot of people were excited a decade ago to go to work for Elon Musk because of his reputation. But many of those people, after a few years, are like, I've had enough of this. This is not, I'm not enjoying this. So he's, been able to really nurture a lot of great talent in the EV space and battery space. He's struggled to retain that because it's a double-edged sword. I mean, someone used to say years ago, Elon is always the very best and very worst thing about this company. And I think, to just step back and say, at this juncture, maybe the board would say, would give serious consideration to, let's try something new. Because, you've done so much up to this point. It's not entirely clear that directionally things are going to continue to go as you hope they will, or say that they will. And, I think potentially maybe it was a missed opportunity. I don't know that these targets are going to be achievable. Some of them will be, perhaps. But right now, it looks really tough to hit all of them over the next, whatever it is, 7 years or so.
And from what you're saying, it seems like these goals show that Tesla is shifting its core businesses to robotics and AI, which are not moneymakers for the company now. Right. So what are you seeing as the future of Tesla within these next couple of years?
Ooh, that's a real tough one because, that point about robotics and AI not being moneymakers for Tesla, they're not really moneymakers for anybody in the AI space. One of the things we report at Forbes is while AI has raised incredible amounts of money in the last few years, nobody's really making any money off of it. No one has really figured out good ways on a big scale. I mean, ChatGPT doesn't make any money. It's not a moneymaker. So when you talk about, we're going to be an AI company, what do you mean exactly by that? Waymo, for example, is an AI company. It has a very specific targeted application of AI to drive a car, a robotaxi. Aside from Tesla's robotaxi plans, I don't entirely understand what Musk has in mind when he keeps talking about Tesla as an AI company, because I keep thinking like, where is the opportunity? What are they monetizing? Like, what are you able to make a lot of money from beyond a self-driving vehicle, for example, which is a very clear targeted application. The robotics thing, I mean, Boston Dynamics has been doing amazing, like humanoid robots for 20 years. They're not making any money from it. And they've been sold multiple times to different companies. And they have really spectacular stuff. I mean, if you see their latest videos, it's incredible what their robots can do. Far more sophisticated than anything that Tesla has shown up to this point, but they're not making any money from it. So, this is where it gets a little murky. So to set as a goal, we're going to be a big AI company and a robotics company. Okay. I still don't see exactly where that's becoming a moneymaker anytime soon.
Well, there's certainly, as always, a lot to look out for here. And Alan, I appreciate your reporting and your investigative journalism throughout all of this. Thank you so much for the time, and I look forward to the next conversation.
Great to be with you.